Good morning, everybody. The date 6/23 of 2019. I have the monthly S&P 500 chart that I'm going to update. Now, one of the things I want people to understand, when we called for that bear move ahead of time, you know what I'm talking about. It's here on the channel that we were going to go down, and we created a bear market territory. Now, for the month of June, the S&P 500 comes right back in and pops right up and makes another all-time high. We are at the top of these ranges, okay? They took bad news and turned it into good news. You've had lots of headlines with China, interest rates, rate cuts, you name it. They were coming out with those headlines. What I am going to say is that the 10-month moving average on the S&P is 2786. That 20-month moving average, which is the red line below here, that is 2757. You can see my pointer here in 2009 on the S&P, and we've gone straight up, and we're in the 10th year of this. Now, what I'm going to do is let you know that when we hit that bottom, which was a major support level at the time, we went ahead and rallied up. But look at that big red month down, the month of May. We called a bear market move, and it was right down to the penny. It tested it. Here's that monthly green bar. I'm going to go ahead and blow this part of it up once again so that everybody can see it clearly. Okay, and we're right here, the 10-month and the 20-month. Bear market volatility goes down like we said it would. Bull market, month of June, bull market volatility comes right up, makes an all-time high. This is part of what we call bear market volatility. It sets way up throughout the calendar 2019, rolls over into 2020. We have the July earnings season coming up. And just let me tell you right now, the July earnings season, we always do it before the fact, not after, but before it. We tell you what's going to happen before it happens in the earnings season. And the earnings season is not going to be good. Slower growth. Companies are going to have earnings season warnings coming out. Prices that have leveraged all up here from that bear down to the bull up to the major top with another all-time high. I can tell you right now, this market is so overpriced. I mean, anything that you would want to have good is even still overpriced. They took good news into bad news. High-frequency trading technology, computing systems were being worked with the headline events that came out throughout the month of June. Today is June 23rd, and this is what we have right here. And I can tell you right now, the summer volatility, so we've had a seasonal change, and this is the summer stock market volatility and what it's like. And why are we going to make a lot of money? We're going to. And right now, everything is set up. And I can tell you guys by the call to put ratio, you've got all of these call charts, which people never look at, are all the way up as high as they can go. That means that the put side of the market is as deflated as it can get. And let me tell you something mathematically. When we go in and do our premier option trading, we look at things the public doesn't look at and that you don't look at. But that's why we're good at what we do. And I can tell you right now, the call side, put side is totally so imbalanced. It's pathetic. So that means that the other side of the market has to come down and that put side market would have to go up. It has to have a rebalancing. And we're very good at that. So basically, bear volatility here, bull volatility comes up, makes another high. Stay tuned. We're using the monthly chart because we feel it's a good way for you to see what we're doing. Once again, we do care about people like you. That's why we do what we do.